So, all right, let me quickly do this then. Let's go to settings. I'm just going to quickly show that I feel like that is very valid. Very valid indeed. I like that. I'm going to show you that. I'm going to show you how to see cancel. All right, so let's go in here. Right, so that was a very, very good question. How do we differentiate between highs and lows? Good question. Let's go into it. All right, so this is the last one, guys. This is the last one. I'm done after this, eh? I'm done. Okay, so there's really a simple strategy to this. A really simple strategy to this, right? So, honestly speaking, in regards to actual structure in the market, you want to see two consistent highs, right? But not major highs, but rather minor highs, right? So you want to see something like this, where price makes a high, and once again, it comes back to liquidity, takes out that high, right? Because once it's taken out the high, it's going to go for the low. And that's going to show you where they're now creating the next low. You hear me? So this over here, people would have been like, but this is a low. And unfortunately, it's not a low. So this over here, we would not consider a low. Instead, this would be an inducement for early buyers to get involved and then taken out, right? So our low, however, though, right, would then be created once again after such is taken place. So over here, right, they purge and they then come down, which then creates this low. So this is then the low, and that is then the high, which means that this is then the low, right? Because they're obviously going to go and create a new high. So highs and lows are actually pretty easy to see. So you just want to see a high generated and then another high generated thereafter. Because if there's just a high, price hasn't created a high. Let me just make sense. So let's try to make this make sense to you. If there is a high that was created, right? So if you look over here, right? Everybody would say this was a low, right? So we would all say price went up, created this high, and then price came down, created this low, price then went up, and then price went down, right? But you see, here they purged liquidity, right? So they were done going higher, right? But they were not done purging. So let me explain it to you. They were done going higher, but they were not done purging. Now let's pretend that none of this was here. So let's say we look at the chart over there. None of this was here, right? But if we look over here, right? If we look over here, you can see that they generated this liquidity and then price comes up and then liquidates that liquidity, right? And then remember now that this is where we at within price, right? So obviously, right, if price made a high, they need to come take out the low. They need to come take out this liquidity, right? So we obviously know now they're going to create a new low. So in the beginning, I obviously showed you guys and taught you guys how to get this low and how to get involved in, liquidating that low and making that your point of interest. So as you can see, price then comes down and we then create a new low. So over here, we then create a new low, right? Because we then purge the previous low. So here is another low that purged the previous low. So as we continue going up now, we know that they're done taking out the low. They obviously want to now go take out the high. So what we do is we get involved at that low that we just created and we go and purge the liquidity at the high. So this is how we differentiate the highs and the lows. Right? And as you can see, price then goes up and we purge that high. Right? But we only purge it, right, after creating two consistent highs. Right? Because there needs to be enough fuel there for price to go higher. Right? Because there was enough fuel here to go lower. So they were done going lower, so they would then go higher. Now, we can't say how high they're going to go. But what we can do is take fractal returns. So we could then say, okay, fine, so price came to this level. Is there any reason for us to start selling off? No. Why? Because then all of a sudden there is a lot of bullish momentum. Price shoots up. Big candlestick over here. Price is starting to show that the buyers are in charge. So what happens is we're now looking for that rejection. We're looking for them to liquidate or to at least trap the sellers. Do we get a trap? No, we don't. So because we're not getting traps, this means that they're still going higher. So here we don't get a trap. Here we don't get a trap. Here we don't get a trap. And now we're waiting to see if there is a trap over here. So what I'm expecting now is for price to come in, trap the buyers, which they have done. So okay, can't see my screen anyway. Sorry about that. Okay, anyway. There, right? So obviously here you can see that we have now failed to trap buy sellers, trap sellers, trap sellers. We haven't trapped sellers yet. So this is telling us that they're still buying. Right? They're still buying. And this is a 4-hour time frame. So on the 4-hour time frame now, right, we could see that they trapped sellers. But over here, they trapped buyers. right? So now we look at point of interest. We look at a higher time frame. We look at, is there anything more powerful up ahead of us than below us? Right? So we go to a daily time frame and we start looking at, is there anything above us? Well, yes, there's liquidity. Funny enough though, not once at that level have they trapped the buyers. So if you look over here, there's still this liquidity sitting at the top over here. Right? There's still liquidity sitting at the top over there. They trapped them over here, but didn't trap them at that high. So we now know that should price go and purge the low, let's say they come down to this low, right? Maybe come into some kind of order block sitting over at that level, and then price will then go higher. Now, if they come into this level, this now shows you that this could be their point of interest. Why? Because they are trapping. They are now trapping the buyers. Those who thought price would go higher bought, price sold. Soon as price came into this level, they bought, hoping that price would then continue bullish. What happens? Price then comes and starts to crumble. And what we're looking for is an entry into this move on a lower time frame. Right? Because now on the daily, we call this a double high. Right? Or we call it liquidity. Lots of liquidity sitting at that level. So once price is done trapping whoever they need to trap, maybe over here at this bottom. Sorry. Oh gosh. Right? Maybe once they're done trapping who they needed to trap down here. So let's say price continues going lower. They can then start making their way higher. And that's now how we differentiate highs and lows, basically. And Bobby's your uncle, yeah.